All right, so are you ready to like really dive into what's going on with GameStop today?
Always ready.
Awesome. We've got some really juicy Reddit threads.
Oh, yeah.
Super stonk RGME, of course,
Mhm.
the usual suspects, and some news that could be a real game changer.
Yeah, definitely some stuff to unpack there.
For sure. And today we're going to zero in on one specific trade on the Chicago Exchange and kind of unravel what it might mean for the price of GameStop.
So, it's amazing to me how those Redditors over there, they're like,
No, they're unbelievable.
they're like financial detectives. They're piecing together these little bits of info like a puzzle.
Right. It's incredible.
And today's mystery revolves around this one single trade for 57,000 shares.
On the Chicago Exchange.
Exactly, on the Chicago Exchange.
And that's worth about $1.5 million.
Yeah.
So people are buzzing about it,
Yeah.
but like, why?
So that's the thing, right?
Yeah, what makes this trade so special?
Well, the Super Stonk folks, they dug into the details, and what they found is that this trade was most likely a hedge for 1,500 call options contracts. And these aren't just like your average everyday contracts either. We're talking a strike price of $60.
Okay.
And they expire in June 2025. That's a long way out.
That is a long time.
Yeah, so for anyone listening who maybe doesn't spend every waking moment thinking about options, can we just
Yeah, please break that down.
break it down a little? What does this actually mean, and why is everyone so excited about it?
Yeah, because I feel like options can be a little bit of a
Yeah, it can be.
black box for some people.
A little bit.
So let's demystify it.
Absolutely. So when you sell a call option, basically you're betting that the stock price is going to stay below a certain level, right? Which is called the strike price, and in this case it's $60.
Got it.
But if the price decides to go above that strike price, then the seller, they're obligated to buy shares to cover their position.
Oh.
And that's where this whole thing called delta hedging comes in.
So let me see if I've got this straight.
Yeah.
So in this specific situation, someone sold 1,500 call options with a strike price of $60.
Right.
So they're betting that GameStop won't reach $60 by June 2025.
Yeah.
But to kind of protect themselves,
Yeah.
they're hedging their position,
Yeah.
and that's where that huge purchase on the Chicago Exchange comes in.
Exactly. They're buying those shares now as a kind of insurance policy.
Okay.
So if GameStop does go above $60, they'll have the shares ready to go to meet their obligation.
Smart.
But here's where it gets really, really interesting.
Okay, I'm listening.
The further out the expiration date is and the higher that strike price is, the more bullish it makes the sentiment behind the trade.
So these contracts that expire way out in 2025,
Yeah.
that suggest that someone thinks that GameStop's price could potentially go way higher over the long term.
That's exactly what it suggests.
Okay, but hold on. Wouldn't buying all those shares to hedge actually push the price up and kind of work against the seller's original bet?
You've hit on the paradox of delta hedging.
Oh.
And it's a big reason why these types of trades are watched so closely, especially for a stock like GameStop, where there's already so much options activity because it creates this feedback loop. As the price goes up, the people who sold those calls, they need to buy even more shares to hedge, which pushes the price up even more.
Oh, wow.
And that can lead to something called a gamma squeeze.
And a gamma squeeze is...
That's when things can get really crazy really fast.
Got it.
So for anyone listening, this isn't just some abstract theory. Understanding this dynamic can give you a serious edge in the market.
So like having a secret weapon.
Kind of. It's not just about the size of the trade. It's about what it tells you about how the price might move.
So it's all about reading between the lines.
Exactly.
Now, let's shift gears a little bit and talk about why the Chicago Exchange is so significant in this whole thing.
Yeah, this is where those Reddit detectives really earn their stripes.
Right.
They've noticed that whenever there's a lot of action on the Chicago Exchange, big price spikes for GameStop tend to follow.
Interesting.
And they've got a couple of theories about why this might be.
All right, so theory number one.
Hit me.
These trades on the Chicago Exchange are basically an overflow of FTDs.
You got it, those failure to delivers.
Right.
When someone sells a share they don't actually have yet, and they're being forced to settle those FTDs on a more transparent exchange.
So it's like they can't hide in the shadows anymore. They have to come out into the light.
Exactly. They got to play by the rules.
All right, theory number two.
Lay it on me.
These trades on the Chicago Exchange are a sign that the way things are usually done is changing.
Okay, I like where this is going.
So some of that buying pressure that's normally hidden away in dark pools is spilling out into the open.
It's like a leak in the system.
And dark pools are those private exchanges where transactions happen kind of under the radar, right?
Exactly, off the public radar. So this trade on the Chicago Exchange could be a sign that something big is brewing.
Okay, so it's like the pressure is building
Right.
and it's starting to leak out.
And the question is,
What's causing that shift?
yeah,
And what does it mean for GameStop's price, both in the short term and the long term?
that, my friend, is the million-dollar question.
And one that we will be tackling head on in just a moment after a quick break. So stay tuned.
Yeah, that is the million-dollar question, isn't it?
It really is.
And to even begin to answer it, we got to look at the bigger picture, like what's been happening with GameStop's price lately.
Exactly, because one thing that's got those Redditors scratching their heads is that GameStop's price has been kind of flat,
Yeah.
even dipping sometimes, despite all these seemingly positive developments. And there's this whole thread called "The Battle for $27 Continues" that really sums up how a lot of investors are feeling.
It's like they're constantly pushing against this invisible wall just to hold that $27 level.
Okay.
And that's led to a lot of speculation about potential manipulation, the
Yeah.
idea that there are these big players out there actively trying to keep the price down.
Now, we're not here to spread conspiracy theories or anything,
Whoa, of course not.
but understanding how these dark pools work and how options hedging works can help explain why it feels like there's this invisible ceiling on the price.
Absolutely. And it's not just about blind faith or getting caught up in the hype.
Right.
It's about empowering investors to make informed decisions based on a real understanding of the forces at play.
And speaking of informed decisions, there's another event that always gets those Redditors glued to their screens.
You talking about the Computershare recurring buys?
Yes, those predictable but still kind of fascinating spikes and dips that happen like clockwork.
Yeah, one user over there seems to have a real knack for predicting these things.
Really?
Yeah, they said that Computershare's buys would happen between 10.46 and 10.47 EST,
Wow.
and they were spot on.
No way.
Yep, a brief little price jump before things settled back down.
It's amazing how even a relatively small, predictable buy order like that can create such a noticeable ripple.
It really highlights the difference between these transparent buys on a lit exchange and the huge volume that we know is flowing through dark pools hidden from public view.
It's like the tip of the iceberg.
Exactly. Imagine if a predictable $500,000 buy can move the needle like that. What about those massive, less transparent transactions happening in the shadows?
The mind boggles.
No kidding.
Okay, so we've covered a lot of ground here. Options, hedging, the Chicago Exchange dark pools, the battle for $27 recurring Computershare buys. Is there anything else our listeners need to be aware of as they try to navigate this whole GameStop saga?
Oh, yeah. We can't forget about the potential new SEC chair, Teresa Goody Guillén.
Oh, right.
Her background in blockchain technology and digital assets could be a total game changer for GameStop.
Especially since they've already started exploring the world of NFTs.
Exactly. Some people are even speculating about the possibility of NFT dividends.
Whoa, now that would be wild.
Can you imagine a company rewarding shareholders with unique digital assets tied to their ownership?
It's like the future of investing.
It is, and who knows, maybe GameStop will be the one to pioneer it.
It's definitely one of the things that makes this whole story so captivating.
It really pushes the boundaries of what we think is possible in finance.
It's like watching a financial revolution unfold right in front of us.
Exactly, and we can't forget about the human element of all of this.
Right, all those passionate investors on Reddit who are so invested in GameStop's future.
They're a community, a movement even.
It's amazing.
Of course, there are also plenty of skeptics out there who think this is all just a meme stock frenzy.
And it's important to consider those voices too.
Absolutely. Healthy skepticism is crucial in the financial markets.
And I love these.
The key takeaway here is to do your own research, weigh the evidence, and come to your own conclusions.
Don't just blindly follow the hype or dismiss it outright.
Exactly. Think critically, ask questions, and remember there are always multiple perspectives to consider.
So as we wrap up our deep dive into the world of GameStop, are there any final thoughts or insights you'd like to share?
What really stands out to me is how this whole saga highlights just how much the landscape of finance is changing.
It's in constant flux.
We're seeing this convergence of traditional market mechanics and these cutting-edge technologies, and it's creating this really fascinating and often unpredictable dynamic.
I know it's like a financial revolution happening right before our eyes.
Precisely, and that's what makes it so compelling to follow.
Now, before we go, we always like to leave our listeners with something to ponder.
A little food for thought.
So consider this. If even small trades on lit exchanges like the Chicago Exchange are generating this much attention and speculation, what does that tell us about the potential pressure building beneath the surface in the less transparent world of dark pools and complex financial instruments?
It's a question worth exploring for sure.
It really makes you realize that even in today's data-driven world, there's still so much mystery and unpredictability in the financial markets.
That's the truth, and that's all the time we have for today's deep dive.
Until next time, keep those wrinkles forming. And remember, the only thing more exciting than a good mystery is solving it.
Happy investing, everyone.
It's funny, right? Like we talk about GameStop and we get all into like the charts and the data and the theories.
Yeah.
But it's easy to forget that this is really a story about people.
Oh, absolutely. You've got these passionate retail investors.
Right.
Some of them have like put their life savings into this stock.
Wow.
And then you've got these Wall Street veterans who are like scratching their heads trying to figure out what the heck is going on.
Yeah, like what is happening?
And then you've got this whole new generation of investors who are like learning about the markets and challenging the status quo.
Yeah, it's like a real clash of ideologies playing out right in front of us.
It is, and it's happening on social media, in the news, and of course in the stock price itself.
So fascinating. And what's really interesting to me is that this whole GameStop thing has the potential to be about so much more than just GameStop.
Yeah, that's a great point. You know, the themes that we're seeing here, the rise of retail investors, the power of social media, the scrutiny of market practices, these are all way bigger than just one company.
Exactly. This could be a real turning point for the entire financial industry.
You really could.
And whether you're like a die-hard GameStop believer or a total skeptic, it's a story that everyone should be paying attention to.
Couldn't agree more. The insights that we're getting from this whole saga could shape the way we invest and think about the markets for years to come.
For sure. So for our listeners, the next time you see GameStop in the headlines, remember, it's not just about a video game retailer.
Right.
It's about a shift in power, a challenge to the old way of doing things, and the evolution of the financial landscape.
It's a story that's still being written, and we're all watching to see what happens next.
That's what makes it so exciting. Well, that brings us to the end of our deep dive into the GameStop saga.
It's been a wild ride.
It has. We hope you found this journey through Reddit threads, news snippets, and market mechanics illuminating and thought-provoking.
As always, we encourage you to do your own research, stay informed, and never stop questioning.
Until next time, happy investing, everyone.